15-1 work together. It's on page 454 in your textbook. And then we'll be doing all our writing on page 399, but we'll be getting our numbers from page 397 and 398. So the first thing we're doing is simply preparing our income statement. So the beginning of this, we're going to do our first 3 lines. Line 1 is our company name, so Interstate Tires, Inc. The next line is the name of the document we're preparing, so this is our income statement. And our last line is for our date, so for year ended December 31st. Okay, then the first section we're going to do is for our revenue. So we're going to skip that first line, and then we will write revenue. Our second line indented will be sales. And in the third column, we will write our sales amount. So $548,989.25. The next line, still indented, is going to be less, sales discount. And this number will go in our second column. It's $661.69. Our next line will be sales returns and allowances. Still indented. This number will also go in the second column, $3,512.84. We will then do a single rule across column 2 and 3. And we are going to add up our sales discount and our sales return and allowance. And we will write that number beside our sales returns and allowance numbers. So that number is $4,174.53. On our next line in our account section, it will be net sales. And this is also still indented. And so to get our net sales, we'll take our sales minus the $4,174.53, and this number is going to go in our last column. So $544,814.72. Then our next line, we're starting a new section, so this is not indented, and it's cost of merchandise sold. And our next line, indented, is merchandise inventory, January 1. So this number will come from our trial balance. And we're going to put it in the third column, $198,480.33. Our next line is purchases. This is indented. And this number goes in our second column, $278,452.39. Our next line indented is less purchases discount. And this number will go in the first column, $1,845.78. Our next line is purchase returns and allowance. It'll also go in the first column, and it's $3,548.65. And then we're going to do a single rule across the first two columns. We're going to add our purchase discount and purchase returns and allowances, and put that number in the second column by purchase return and allowance. So it is $5,394.43. Our next line then, indented, is net purchases. And so we're going to take our purchases minus that total that we just arrived at, and this number will go in the third column, $273,057.96. Our next line is total cost of merchandise available for sale. And we're going to do a single rule underneath the 273,000 number. And we will add it and our merchandise inventory together. And so in our third column, we'll get $471,538.29. Our next line is less merchandise inventory December 31st. And this number goes in the third column, $188,999.25. We will do a single rule beneath that number. And our next line indented then is cost of merchandise sold. And so we'll take our 471,000 minus our 188,000, and this number will go in our very last column, $282,539.04. We'll do a single rule beneath that. And then our next line, not indented, is going to be gross profit on sales. So to arrive at this, we're going to take our net sales minus our cost of merchandise sold, and that means we arrive at $262,275.68. Our next section is for expenses, so that's our next line. We won't indent. And now what you can do on your own is just look At page 398, we're going to list all the expenses in order and put all of their amounts in the third column. So now if the sub wants to pause it, I'll do that on my own and you can do that on your own. So just list all the expenses in the same order they are on page 398. One additional thing, make sure that you are including everything from line 35 through line 48 for this section. So line 35 through 48. Now that we have all our expenses written out, we need to total that. So underneath utilities expense, we will write total expenses. We will put a single rule beneath our utilities expense amount. And then we will add all those expenses together and write this number in the last column. So that should be $184,764.54. And then our next line will be our net income before federal income tax, and this is not indented. And so to calculate this, we are going to take our gross profit on sales minus our total expenses. And we are going to get $77,511.14. Then our next line, not indented, is less federal income tax expense. And so to get that number, we're going to look back on page 398. So this is our line 49, and it's going to be our income statement amount. So this will also go in our last column here, and it's $14,603.79. And I think we forgot to, underneath our total expenses, put a single rule there. And then our last thing is our net income after federal income tax. So that is not indented. And so we'll put a single rule beneath our 14,000 number. And so to get this, we'll take our 77,000 minus 14,000 and arrive at $62,907.35. One thing you want to look at then is look back on page 398, see if this number matches. They do, so we will do a double rule across all of our columns. Okay, and then the last thing we have to do for this is part 2, calculate and record our component percentages. We're going to do 4 of these, and when we calculate them, we're going to round to the nearest 0.1%. So we're always doing as a percentage of sales, just like the column tells us here. So then our net sales will always be the 100%. And then we'll just divide every other number by that. So the next one we're going to do is our cost of merchandise sold. So we'll take the $282,539.04, divide that by the net sales, and get 51.9%. We also have to do our gross profit on sales. So we'll take 262,275.68 divided by the net sales and get 48.1%. And then at the bottom, we are going to calculate our total expenses. So total expenses divided by net sales, and we get 33.9%. And then our final one is our net income before federal income tax. So that number divided by net sales, and we get 14.2%. Now that you have that completed, you can go ahead and get started on your own.